welcome to another episode of Culture Calls, a monthly podcast by Culturalytics, where we talk all about culture and organizations, why it matters, and how leaders can get to grips with it. Today, we have a special session. I'm very pleased to be talking with Sushma Kaushik about organizational culture from the perspective of an investor. Sushma is partner in Aavishkaar Capital, a Mumbai-based venture capital firm. In the early 2000s, Aavishkaar Capital pioneered what was coined impact investing, focusing on early growth stage enterprises with a focus on sectors and geographies that were often overlooked or considered just too challenging. Sushma brings 20 years experience in early growth stage investing. She's identified, scaled, and exited a large number of companies, including many seed stage ventures that went on to be publicly listed. She also uses her free time to advise startups. For her work in 2020, Sushma was recognized as one of the top 100 women in finance. So welcome, Sushma. We're really pleased to have you on Culture Calls. You know, we often talk to people who manage culture from the inside of a business, but today we're really interested to be talking with you about what culture looks like from the outside. So when an investor like you is looking to invest in a company, does that company's culture matter? You know, and if so, why? And how do they deal with it? And how do you deal with it? But let's start just for a minute with you. I was hoping you could tell us just a little bit more about yourself and your work at Aavishkaar Capital.
Sure. Thanks so much, Clyde. Thanks for having me on this podcast. And I do understand that I'm the exception to all the other speakers who have been on this podcast. And I do hope I can add some interesting insights to all those who are listening in. So very quickly about who I am and what I do. So I'm an engineer by education and have been an investor for the last 20 years. Started my career in real estate investing very quickly. Realized that that's not my calling. Did a short stint with an international not-for-profit called the Ashoka, which works with social entrepreneurs, and then made the switch back into impact investing at Aavishkaar. At Aavishkaar, I have led multiple investments across stages, across sectors, and working with social entrepreneurs and founders who are looking to disrupt status quo. I find that very, very exciting. And that's what keeps me going. So impact with purpose, with returns is what drives me.
So I thought I'd start out with the whole subject of the decision to invest. So, you know, we all know Peter Drucker's famous dictum, culture eats strategy for breakfast. But in your experience, is there truth in this for an investor? So especially like for a firm like Aavishkaar Capital that invests in early stage businesses, you know, when you're assessing a business for investment, is culture a factor that helps drive your decision to invest or not?
Sure. No, Claire, I think that's a very, very important question, and it's a little hard to answer because it's very, very complex, right? When we evaluate from an investment perspective in very early stage companies, sometimes the company is not even formed, right? It is just at an idea stage, and we have to take calls on the founder's ability to build an organization. What kind of an organization will this founder end up building? Will it be an institution that will stand the test of time, or will this, crash and burn, right? And that is a very, very difficult assessment to make when there's no evidence to support any of your decisions, right?
Yes,
and so that only comes by spending a lot of time with founders, understanding what their value systems are, what they offer in terms of how they intend to bring it all together in their company, what their motivation to start this business is, how they intend to attract talent, how they intend to grow. Are they thoughtful founders, or are they here only for the quick valuation upticks that they see? Those are the kind of assessments we do as investors. And clearly, culture kind of cleans through when we have these discussions. because when we question them around how they intend to build teams, what could be the team structure looking like, the org structure. There's an inordinate amount of time that we spend in trying to understand those aspects of building a business before we actually make an investment. So yes, you're absolutely right. Culture is one of the most important aspects when we make an investment, and we've also seen it through. So we've been investors in companies for 8 to 10 years. So we see multiple cycles, multiple ups and downs in businesses, and those founders who have who have the ability, who are very grounded, who know how to handle people, are the ones who really sail through in such circumstances.
That's very interesting. So you actually have come to see that the culture you believe that these leaders will develop is key to your decision about whether or not to invest.
Right.
Fascinating. So let's move on to talking about the impact. So once you've invested in a company or once you've facilitated an acquisition, have you seen the culture then impact growth and return on your investment, perhaps in ways that were not anticipated? Can you maybe share some examples of when culture enhanced or perhaps on the other side undermined value of the investment?
Sure. No, so those are two very interesting questions. One is what has been the outcome of a culture post an investment in a company, and the second is how have we kind of facilitated M&A where a company of ours has either been a target or an acquirer. Two very, very different data points that we have. So out of the 75 companies that we've invested in, there have been at least a handful that have been through multiple of these journeys, right? So when we look at investments in companies, what we have found is the companies that end up being institutions, that is, we believe they will end up being multi-generational, are those where the foundations are very, very solid, right? So where the founders have very thoughtfully put together a team, where the leadership team especially. So we focus largely on the CXOs coming in and working together. And there also we have some very interesting insights. We know how well a investment of ours will do within the first 12 to 15 months. If the CXO team is able to work together for the first 12 to 15 months since our investment, we know that team is gold standard, right? They can build things together, because the first few years of a development of a company is very, very stressful. And so that's where, kind of things give way. However, wherever we have noticed that, there has been a little bit of founder friction, or the CXOs have been leaving the organizations too quickly, or the team that we invested in back in the day has completely been changed in 12 to 15 months, we know that things are going south, right? So that's so clearly it's like a metric for us, and it's like a soft metric. We know we get worried when there is attrition at leadership level after our investments, right? So that is clearly an area that we focus on to ensure that it's the right people who have come in with the right value adds, with the right culture as well, wherever they've come from, they all have something similar to add. And that becomes a very important aspect in our diligence as well. The other thing that we have seen is in M&As, as you were talking, where, and 4 or 5 of our companies have been through different journeys of consolidation, where either they have gone and acquired a company or have been acquired by someone else. We have seen that wherever where the founders are experienced, are mature, they have been able to manage the turbulence during any consolidation far better. And when we ask them why, Just in fact, this morning, while I was preparing for this, I spoke to a few of our founders, and there's this one woman founder who's just going through that transition, and she had some fantastic insights to share. Right, so she said the one thing. So there, she split it into three parts. One is the pre-consolidation phase. The second is the consolidation activity itself, and the third is the post-consolidation phase. And someone with maturities can, really figure it out into these three buckets. And also the way they tread through these three phases becomes very important, because we found that in the pre-consolidation phase there's a lot of uncertainty, there are a lot of rumors, there's rumor mongering. So people in a company get a little uncomfortable. They don't know if their jobs are going to be there. Is this going to be good for the company? These are, and you have to understand, these are startups, right? So people have actually joined these startups with a common goal to achieve some outcome. And so suddenly, if you're talking of M&A, consolidation, they're like, is this what I came here for? Why do I need to be here? And so then the onus is on the founders to ensure that they maintain transparency, honesty. They are very clear in their communication. So, I mean, I think the lesser we talk about the communication, the worse it is, because communication is very critical through the whole process, right?
And maintaining, I assume, maintaining a sense of purpose through all of that, that they started with. Mm-hmm.
Because everyone joins an organization where where they believe that they have a certain alignment and purpose, right? And they don't want that to be shaken. Money, designations, all those follow, but that sense of purpose needs to be intact. And so that was a common factor. The value systems need to be there, and the communication that this is going to continue, there's a continuity in these things, is what keeps people together. And where we have seen the post consolidation journey, we've seen both outcomes, right? In one case, the entire consolidate the target, they disappeared, right? Every single member of that team left the organization after 18 months, right? Like there was not a single old employee left. So that is a reflection that it was probably not a great consolidation effort, right? And probably there was an impact in the quality of the growth of the company as well, right? And we were at the receiving end of it. As investors, we don't like disruptions that don't add value. And so maybe we didn't know better. Maybe it was not handled in the right manner. And these are startups, right? So they can't really afford very fancy consultants like you to help them out in that process. But if there was some kind of a playbook that we could share with our founders, that listen, this is how a consolidation journey looks like. These are the areas that you need to focus on. These are the metrics you need to measure, the baseline, the post-consolidation metrics. Maybe those things could be easy. But we just have been doing this very informally, so to say, with no intentionality towards something like this. So that's definitely an area that we would love to get better at, because we do see the impact it has on people. It has a mental impact. We've seen a lot of people start falling ill very quickly after such consolidations. And for us, when we are on the board of a company or when we are investors, one of the most dreadful thing is to be told that the CXOs are falling ill very often, right? So that is a red flag for us, that why are they falling ill? Is it because of the kind of stressful environment that you have created for everyone? Right. So these are the softer aspects that we try to catch on and fix in many of our investments.
That's really fascinating. It sounds like you're describing these things that you're talking about: communication, purpose, values, communication. These are all things that have to do with culture, the soft stuff, as you're saying, that clearly have a hard impact from your perspective as investors. So you're watching these things very carefully. It's very
Absolutely,
interesting.
absolutely.
Yeah.
It's hard to put a metric around these, right? It's easier to take comfort behind financial metrics because these are measurable, right? But in these aspects, all we look at is, okay, what's your attrition rate? What is your how often are people coming to work? What is the attendance rate? We just pick on these kind of metrics, but we really don't know what to do beyond that.
Interesting, even though it's clearly central to what you're actually evaluating in terms of the return on investment. That's very interesting.
Absolutely.
In fact, it is interesting you say you don't have a way of assessing it. I guess there's, would it help if there were a way, for investors a better way for investors to predict, to evaluate culture and predict its impact on your investment? It would be interesting.
Absolutely.
Yeah. You talk about the soft stuff. To throw one more quote at you, Jack Welch, as you know, former GE CEO, always said that the soft stuff is the hard stuff. And I just, in addition to what you're saying about that, it's something that it's difficult to measure. What you say how do you talk to businesses about culture? Do you offer them advice along these lines in this subject area? How the culture is important and how to build the right one. Do you talk to the companies you invest in about this?
Yeah, sure. See, we as investors, we don't claim to be experts in this space. But what we do is we recognize that there are certain experts out there who could add value. So many of our founders are young founders, and not just by age, but more by experience of being a founder, right? They might have been professionals in their previous avatars who have now started off on their entrepreneurial journey for the first time. And they probably are not equipped with all the resources that would help them in this journey. So what we do is, of course, we do try to institutionalize things like policies, HR policies, posh policies. We try, so Aavishkaar is also a 2X flagship focus fund, which means that we try to bring in a lot of gender diversity into organizations as well. So sensitizing founders around gender issues, how to make workplace a far more better workplace with women in it. Those are the kind of roles that our interventions that we try to encourage with our founders. We also bring in consultants, who can help in this matter. Like sometimes we bring in leadership coaches, sometimes we bring in professional consultants who help guide these founders through tricky times. Sometimes they work, sometimes they don't. But that's our job. We need to connect the dots for them. And of course, at the end of it, they are the recipients, they are the beneficiaries, they take a decision.
Right. No, very interesting. Let me ask you if, in general, if this subject, you're talking very sort of passionately about the importance of culture in your investment work. Is this something you say is coming up the agenda of the investment community in general? Perhaps post-pandemic, since I think culture came up as a subject, particularly in that time, or not yet.
So I would say it's not, nobody is calling out culture itself. However, the focus has now moved to being more responsible as as investors as well as founders, right? And hence ESG, the environmental, social, and governance aspects have come to the forefront. And in that, in the social and governance aspect of things, culture kind of is embedded into it. So having great workplaces, ensuring that it is an equitable workplace, ensuring that it's a safe workplace, all of these are now taking precedence without calling out culture specifically.
And what I'm hearing from you is that culture is core to your investment decisions, and you've outlined some of the things about that, about the leadership, about communications, about values, about purpose. And you do it instinctively when you're evaluating investments, but don't at this point have sort of as you say, the more sort of hard or quantitative way to look at it. And if there were something like that, it might be interesting too.
Absolutely. It would really make our life easier.
Well, thank you so much for sharing. It's as you said, as we've said before, it's just sort of a new take on culture, I think, for our listeners, and I think it's really absolutely fascinating for them to hear. I look forward to sharing it. So thank you very much for joining us on the call today, and thanks everyone for listening. If you have any questions, please do get in touch. Please make sure to like our post in LinkedIn, and we're always here to talk about culture and business. So thanks very much.